Greetings, members, one and all of the Salivation Nation. Is the gold rally running out of steam? Was it really fun while it lasted? Let's explore! Before we get into this article, let's take a look at the prices for gold and silver. They are up just slightly, gold is, but it's down from yesterday's. The prices actually did go down a little bit, and silver is only up slightly right now, but gold is above $1,700 an ounce, and a lot of people are bullish on gold right now, and that typically does seem to be the case whenever there is a bull market. For anything, will people jump on the bandwagon and they are bullish? I typically don't really follow that line of thinking too much. However, in this particular case, I'm bullish too on both gold and silver. Well, frankly, all the metals. But nonetheless, it is what it is. So we have a contrarian point of view here. Mark Holbert from TheStreet.com writes about the gold market, and he's got a contrarian point of view. So let's explore this and see exactly what kind of logic he has for this. He said gold's recent rally, though undeniably impressive, is running out of steam. That's because gold market timers have become too enthusiastic in the past few days. That is a bearish short-term omen from a contrarian point of view. To be sure, the gold timers can be excused for becoming enthusiastic. They have been waiting for nearly 9 years for gold to surpass its September 2011 all-time high above $1,900, and it finally is mounting a significant effort to do so. Regardless, though, there's no denying that sentiment conditions are not favorable for an immediate run towards those highs. Only when the gold timers become a lot less enthusiastic will contrarians start to looking for such a rally. Although I kind of disagree with that. I think the sentiment conditions are favorable for an immediate run towards those highs with some pullbacks. But, a lot of it is based off psychology as well, too, and that's almost impossible to predict. Consider the average recommended gold market exposure level among several dozen short-term gold timers that the author monitors, as measured by the Holbert Gold Newsletter Sentiment Index. The average currently stands at 52%, which is higher than 79% of all daily readings since the year 2000. Just 2 weeks ago, in contrast, on April 1st, the HGNSI stood at minus 16%, which meant that at the time the average short-term timer was recommending that gold trading accounts be 16% short. And just 10 days prior to then, on March the 20th, the HGNSI stood at minus 22%, which I kind of don't understand, that kind of thing about gold timers and the like. But there it is. The news, I guess it measures sentiment, which really is a kind of difficult to quantify in my opinion. You look at the Holbert Gold Newsletter Sentiment Index compared to the gold bullion at the left axis. You can see how kind of far apart they are through the whole thing. It's really tough to really measure that based off the sentiment, but it is clear that they're pulling apart here. But look at kind of where they were back in October 2018. We can arguably say that there was a much wider gap then. These are two significant aspects of these readings that are relevant to this discussion. Gold's rally over the past few weeks, $200 since April 1st, nearly $300 since March 20th, should not have come as a surprise. The April 1 HGNSI reading was lower than 92% of all the daily readings since 2000, and that of March 20th was lower than 95% of such readings. Those readings represent extreme bearishness. Situation is now different. The increase in bullish sentiment over the past couple of weeks represents an awfully quick jumping into the bullish bandwagon, which kind of I referenced that at the beginning of this video. 68 percentage points higher in 2 weeks' time and 74 points since March 20th. Such a quick increase in bullishness is not a good sign from a contrarian perspective. To give you an idea how much the contrarian support for gold's near term has weakened over the past couple of weeks, consider the average return since 2000 for gold mining shares in the wake of readings as high as HGNSI is now 79th percentile, and in contrast, in the week's reading as low as we saw March 20th, the 5th percentile. And here's this graph here. And this is based off the average gold miners, junior and primary there. So the usual qualifications apply. Of course, no market timing guide is perfect. The contrarian analysis is no exception. Sentiment is not the only thing that makes the investment world go round. And even when contrarian analysis is on target, it sheds light on gold's near-term prospects. So very, very well may be that gold, and say in 12 months' time, will succeed in eclipsing its September 11th high. But in the future, is like the path gold takes to getting there will take it lower first. We'll see. And the only I believe I guess the one evidence for this article would be the past day where it dipped down a bit. But make no mistake, gold is what it is. Will continue to press on, and I believe I'm still bullish on it, considering what's going on with every passing day that we remain shut down. The harder it will be to get out. And I don't know what kind of ratio you would hold on to it, but you think about it. If 1 day of being shut down is equal to 5 days recovery, that gives you some idea that it might grow exponentially for every passing day, especially when you have certain companies like restaurants that may have opened within the year or 2 years or even 3 years. It's going to be very tough for new businesses to come back around. We also heard things like the XFL is calling it quits, and it was a pretty promising alternative football league to the NFL, and now they are not going to be coming back after this. No matter how much stimulus you throw at it or relief, there's only so much. Those dollars, I don't believe, are worth nearly as much as the dollars earned but from sweat equity and the like. And keep in mind, the dollars that are being printed right now as part of this relief package all but dilute the money supply and the value of the dollar even more. There's no question about that. And I've heard spoken that this particular $2.2 trillion package will cost every American $16,000. And what are we getting for it? A $1,200 check. Nice. Yeah, so there's a lot of discrepancies here with this thing, and and where the economy and what's going on and how we're going to deal with this. I think it's time that we open for business again. This particular virus is serious. There's no question about it. That message is clear. That message will not change on how we are to live responsibly. But we need to live responsibly in an economy, because the economy is disappearing before our very eyes. And I believe that, at the end of this month, we should reopen. And I believe that states should follow suit and do it in a smart way, expand it out. But I believe the time has come, regardless of whether or not we meet a peak or what. And some people say we're flattening the curve, and if that curve is flattened right now, that's fine. But I believe that the time has come for us to get back into business and be very careful as we do so. But we have to have an economy to come back to. We've got to stop the bleeding. We've lost another 5.3 million jobs this past week, bringing that total to, I think, 22 million jobs lost. There's only one way for gold to go, in my opinion, in this kind of a situation, in this kind of climate, when we're just bleeding dollars and losing jobs and throwing money at the situation, throwing currency at the situation. and that is for let the real money shine, and that real money is gold, folks. Gold is the ultimate safe haven, and I believe it's going to go higher. And, a huge part of me wants to be wrong on this because I want the economy to recover. I want the dollar to be stable. But I think we've crossed that Rubicon. And this time, I think for sure the sentiment is going to be as such that it's going to be a while before we get back to some sort of normalcy economically. And with the dollar, that's another situation of what the value of the dollar will be and how it will affect in terms of inflation and the like in the months to come and years to come. And I say that, some people are probably yelling at the screens now and saying, well, Uncle Sal, that what's going to happen to the dollar. It's going to fail because they're printing too much of it. But I'm not so sure, folks. After 3 rounds of quantitative easing before, a lot of that money went to Europe, has not been repatriated back. In fact, what was repatriated back from Europe? Gold, pre-33 gold. It diluted that supply, and many of those coins went down to near spot. Now, what happens to the currency is a different matter. I don't know. Could it come back to bite us? It very well could, and it will bite us hard. But how much time will we have? I'm not going to even begin to guess. But make no mistake, I believe that no matter what the case may be for the dollar, I think gold has crossed a new level here. And I believe that we're not going to see $1,200 gold again, if ever. I don't believe. It used to be $1,000. I said I don't think I'll get below $1,000, and it got close. I remember talking about that, and gold got down to like $1,100 or the high 1,090 or something like that, or maybe 1,050. But I believe that new floor is $1,200, and that's a stretch. And some people are saying, no way, it's going to go way up to 2, 3, 4, 20,000. I don't even know. I hope it doesn't get up that high. But nonetheless, gold is the ultimate safe haven, even more so than silver, I believe. And I think silver is going to have a new floor as well, too. But I believe gold, being the ultimate safe haven, is the ultimate check and balance against currency systems around the world. And I believe it's gotten a whole new level of price, further maintaining its value, improving its worth. So there you have it. So post your thoughts below. I can see the sentiment in this article, but I think that ship has probably sailed. And we've already seen those little dips here or whatever. I actually took advantage of it very slightly with a purchase I made. So I'd like to extend a multitude of gratitude to you all for watching and encourage you to please rate, share, comment, and subscribe.